What's up guys, I'm Arman. I've made multiple six figures trading CFD prop firms, which is normal Forex prop firms. In today's video, I want to talk about the recent crazy increase in Forex CFD traders moving over to futures. You've probably seen it online on the internet. All the top traders from Forex are moving over to futures. Why is that the case? In today's video, we'll be going over that, comparing Forex and futures in the prop firm industry and seeing maybe how you can transition over from Forex to futures yourself too. One of the main reasons a lot of the Forex traders are switching over to futures is because with futures, you don't have many of the problems you would encounter with Forex on CFD brokers. For example, CFD brokers have a lot of manipulations, executions are different, there's spread, slippage, which the broker would decide. But however, with futures, everyone's trading on the same exchange, which is the Chicago Market Exchange, which is CME. Everyone trades on that. Futures are a regulated asset class in the US, unlike many of these CFD brokers, which are not even regulated. So you have all these issues with Forex brokers where you're getting manipulated, your spreads are going crazy, your slippage is crazy. But on futures, none of these issues are there. You have instant fills on your orders and it's just much smoother. One of the very big misconceptions with people switching from Forex to futures is, oh, am I going to have to change my strategy? No, the answer is just no. You don't need to change your strategy. As long as you're a profitable trader on Forex, CFDs, you can smoothly move over to futures, because at the end of the day, you're trading the markets and the markets are the same. The price action is moving very similarly. There's not any difference. The underlying asset is the same. So yeah, you don't need to worry about changing your strategy. One thing to keep in mind though is that with futures, you cannot swing trade. That is probably the only downside of futures at the moment, that you cannot swing trade. The main reason for that is futures have an expiry date, so you can't hold your trades through the expiry date, unlike with Forex brokers where you can just hold your trade for however long you want. There's going to be some terminology differences. So for example, in Forex we refer to price measurement as pips, but in futures is ticks. That is one key terminology difference. And then most people will obviously be saying that whichever way they're currently trading is obviously easier. So if they start with Forex, they'll be saying Forex is easier to learn. People that start with futures will say futures is easier to learn. Obviously that is not true, because as long as you have the market knowledge in Forex, you can very easily translate that over to futures. Let's talk about something that you need to watch out for when trading futures. One of the most important things that you need to be watching out for is always trading the front contract. The front contract is the latest contract, so it's the one that expires this month. So for example, if you're trading NQ, you want to trade NQ for the month we are in. You don't want to be trading NQ contract that expires in 5 months, 10 months, because that is going to have low liquidity and very bad movement. Basically what that means is if you want the best movement and the best liquidity, you need to be trading the front contract, which again is the latest contract, so the latest month that we are in. You can always check the CME website to see which contract has the best liquidity and best movement. Once you understand this, you'll pretty much be set to be a futures trader, because now you'll basically not have any of the issues that you were having as a Forex trader, which were the manipulation the broker might give to you, the manipulation that the broker might have set on your accounts, the manipulation, the spreads, the slippage that the broker has imposed on every trader. So now all these problems are basically solved with futures. And it's really great to see that a lot of our top traders at Blue Guardian are transitioning really well over to Blue Guardian futures. And now they're having amazing results even on futures. If I was to go back in time and tell myself 3 things that I need to know before I make the switch from Forex to futures, is these 3 things. These 3 things is what I would keep in mind at all times. Number 1 would obviously be the front contract. Always trade the front contract, the contract that expires the current month or the current quarter, because that will have the best volume and the best liquidity for the trades. The number 2 thing will be understanding position sizing on futures, because position sizing on futures is different. Because for example, the NQ gives you a 20x leverage, but the ES gives you 50x leverage. That's an example. So you need to understand the different assets before trading them so that you are ready to trade profitably. Number 3 would be not switching up my edge, because as a trader we need to understand that our edge is basically our gold. It's what took us years and years of studying and hard work and testing to acquire. So why would we change or even have thoughts about changing our edge? Just because you're switching from Forex to futures, it does not mean that you need to change your edge. The best thing you can do is maybe adapt it to fit some of these rules that futures platforms might offer. Maybe you hold your trades longer, so now you might have to adjust your stop loss maybe, or your take profit, but don't make any major changes that are going to completely switch up your edge, because that is a very big mistake. Unless obviously you're a swing trader and now you want to trade futures, because then there's going to be issues, because the contracts that you're going to acquire are going to expire in a long time, and those are not going to have the best volume and the best movements for your trades. So in that case, you might have to look into refining your edge.